Yo, 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 yo. What is up, guys? Hope everybody's doing well. Let me know in the chat if you can hear me loud and clear. What is up, guys? What is up? What is up, guys? Can everybody hear me? Let me see. All the way from Nepal. Fantastic. I think everything is working, guys. Okay, you can hear me perfectly. Thanks, Steve. Good to see you guys again. Loud and clear. Fantastic. Okay, well, I'm glad to hear that everything works. That was the most important part. Well, that's the hardest part to get to pretty much always. Let me check and see if everything is set up properly on my end, and then we're just gonna dive in as usual and see where the markets are potentially heading next. For everybody who is new to the stream, or for everybody who is not new to the stream, make sure to join the Discord server. Link is pinned in the chat here for you guys to join. And for the rest, we're just going to have another very educational stream with a lot of good information going to be shared again as always. No need to spam the chat yet with your messages, guys. We're gonna provide everybody with the opportunity to tune in to this stream, and then we're gonna start off with a fundamental update, guys, or a fundamental quick little presentation on interest rates. So everybody is gonna be enjoying hopefully this presentation, a little sneak peek of what you guys can expect today, because we are going to be talking about interest rates. It's going to be another great session, something that everybody needs to understand, and it's going to help you with your fundamental knowledge and with your overall general knowledge of the market itself. Now, let me know in the chat, guys, where you're tuning in from today. Super curious to hear. Thank you, Lauti, to know that you're from Argentina. Wow, that's crazy. All the way from Argentina. That's a very, very, very far away country. Then we have somebody from Morocco as well. Hanan, thank you for tuning in. We have Egypt in the house as well. It's going to be another great educational Tuesday, guys. Ooh, we have Romania as well in the building. Fantastic, guys. Utrecht. We have the Netherlands in the building as always. The Hague as well. Welcome, Victor. Yeah, guys, don't forget to leave a like on the stream as always. That's always highly appreciated. We have Haarlem as well. We have Turkey, Czech Republic, Botswana, Kenya, Bay Area in California. We have India following me from 2022. Man, then you're a real OG, Lauti. You remember those old streams as well. We have Netherlands, Australia, Sydney, Nigeria, India, Nepal, Ghana, South Africa, Turkey, Slovenia, UK, West Midlands as well. Fantastic, guys. Well, it's a pleasure to have you all here on the stream today. I've prepared a little thing for everybody to receive some free education, as I like to call it, and just some general knowledge and updates on the market. So first of all, we're going to do a quick refresher on interest rates so that everybody's up to speed and learning more and more about the fundamentals of the markets, that we as an entire community and as a, let's say, entire channel can all help each other move forward in our journey. For the rest, what I'm going to do is I'm just going to drop the link in the Discord server, and then without further ado, we're just going to dive in. We have even gotten Dubai in the house as well. Okay, guys, so I'm just going to drop the stream link in the Discord. So fundamental stream. I'm going to drop the link in the Discord now, so that everybody has the opportunity to join, because this is again going to be a great session. And then without further ado, we're just gonna dive straight in. Okay, so what I'm gonna do is I'm just gonna give you guys a quick update on Euro USD. We're gonna give everybody 2 more minutes to tune in, and then we're gonna dive into the session itself. In the meantime, don't forget to leave a like on the stream, always highly appreciated. Now, first of all, Euro USD is pushing down lower, pretty much in line with what we discussed this morning. As you know, the overall fractal structure is bearish. If we look immediate structure here on the daily time frame, we know that the daily structure is bearish as well. Obviously, from a daily perspective, we had quite the overextended move in towards the highs. Then what happened is that we grabbed liquidity, and then what we wanted to see happen with the daily fractal structure break. So the daily fractal structure break is just simply the confirmation that there's a potential pullback in play. So we get the little uptrend here, the break up, here again the break up, and then here we had the break down. So from that point onwards, this is then your fractal high, this is then your fractal low. The market starts retracing in towards the highs, and then at some point in time, based on the daily fractals, you would expect it to continue down lower. So the overall structure indeed headed down lower after what? After providing us again with a 4-hour fractal structure break, which happened over here. After that fractal structure break on that low, what did we see? We saw a retracement into where? The 618, and then into this overall imbalance candle. The imbalance candle is a 50% body candle over here, which then from there, pushed the market down lower again. So some nice 4-hour price action going on here on Euro USD. For anybody who wanted to get an entry, there was obviously a nice entry opportunity this morning from the buy before the sell here. What we got here was the fractal high break, then the fractal low break, and then obviously you had kind of like the perfect retracement in towards that supply zone, and then from there the overall sell-off in towards the downside. Now I'm not expecting too much from Euro USD overall. Why? Well, because it's currently consolidating in this little range over here within an overall greater range. And obviously tomorrow, guys, we have very, very heavy news coming in the United States, where Trump is going to be speaking at 3 p.m. in the afternoon in Washington, and this is going to cause the markets to move like crazy. That's why I'm not expecting too big moves on Euro USD. I'm not expecting it to break this low, and I'm not expecting it to break, let's say, this high pretty much until tomorrow afternoon. So it's probably going to be stuck within this range. So there's no real use in trading the 4-hour. If you are looking for trades, I would really not go any higher than the 15-minute time frame, because then obviously you can start trading off of these 15-minute order blocks like we have this one over here. It left behind equal lows as well, so overall some nice price action from that area of supply. Now, guys, don't forget to leave a like on the stream. Hope everybody is doing well, and we're going to dive in to the fundamentals that move the market. And today, guys, we are going to be talking about interest rates, okay? So this is some very, very crucial information. I hope everybody has a pen and a paper or a laptop where they can take some notes of the fundamentals that we're going to be discussing today, because interest rates, guys, are the most single-handedly important fundamental aspect of trading. Let me call it that way. Thank you a lot, Chiwan Jimmy. It means the world for your donation, man. Appreciate it very, very much. But yeah, so today we're going to be talking about interest rates, guys. So first of all, we're going to start off with a quick introduction about what actually are interest rates. I'm going to make myself nice and small and put myself in the corner so that I am not obstructing the overall view, and then I'll make myself bigger again once we get out of the presentation itself. Okay, so first of all, interest rates, guys, what are they? So they are the cost of borrowing money, or the return on savings set by central banks to control economic activity. Changes in interest rates have a direct impact on financial markets, including obviously Forex, stocks, bonds, crypto, whatever you do within the financial markets, guys, it is going to be affected by interest rates. Now, understanding how these interest rates work and their influence on the economy is absolutely crucial for us, because interest rates at the end of the day is what's going to make the market go up and going to make the market go down. Okay, so if you want to know what the interest rates are, you can go to forexfactory.com. On the left bottom, there is an overview with the central bank rates. Here we can see the pound and the dollar, they have high interest rates. So what does it mean? It means that the cost of borrowing money is going to be expensive, but also that the return on savings is going to be high. If we look at Swiss, or if we look at Japan, the cost of borrowing money is very, very low, and the return on savings is also going to be very, very low. Okay, so this is just a quick introduction on those interest rates. So let's break it down real quick, okay? So I have some crucial facts that you need to understand. So first of all, interest rates affect borrowing costs. So when interest rates rise, it becomes more expensive to borrow money because you're going to have to pay more interest. So if you were to borrow money in Great Britain, or if you were to borrow money in the United States, then what would that mean? It would mean that it is expensive to borrow money because you're going to have to pay a lot of interest, okay? And the interest is the money that you pay in order, guys, in order to receive that money, right? So conversely, when rates are going to fall, borrowing will become cheaper. So borrowing money, again, in Japan is cheap, and borrowing money in Great Britain or in the United States is going to be expensive. Now, the impact on savings and investments, guys. The higher the interest rates, this will encourage saving because you will earn more on your deposits. But they discourage investments since borrowing costs are going to be higher. So what does this mean, guys? It means that if you, for example, are in the United States and there are high interest rates, but you want to, let's say, buy a house, you are going to have to pay a lot of interest there on the borrowed money. And that, therefore, will discourage overall investments as those borrowing costs are going to be high. Now, the influence on inflation, because we talked about inflation last week, the central banks will often raise interest rates to control inflation. So if you remember from last week, if inflation is high, what will happen? They will raise the interest rates. Why? Because if inflation is high, everything becomes more expensive. The economy overall is going to be hot. So what they want to do is that they want to rise or raise those interest rates, because this will then discourage investment and cool down the economy overall. So higher rates can reduce consumer spending and business investment, cooling down an overheated economy, and lower rates can stimulate spending and investment, which may, in comparison to those high interest rates, boost the inflation. So when the economy is slow, you do low interest rates. When the economy is very hot and inflation is very high, you have high interest rates, because high interest rates discourages borrowing money and will discourage the overall making of investments. When you have those lower interest rates, this will encourage making investments and it will encourage borrowing money. Currency value connection. This is obviously the most important part that everybody's going to be interested in. So the higher interest rates will strengthen a country's currency because foreign investors are attracted by the potential for higher returns on investments, and conversely, lower rates might weaken the currency. Now, we all know that the Japanese yen has always been a very weak currency, and that, for example, the US dollar against the Japanese yen, the US dollar has always been a lot stronger. And this is very simply said because of the interest rate differentials. So the difference between the two interest rates between the United States and Japan. As simple as that. Now, the key economic indicators that affect these rate decisions. So how do central banks come to the conclusion that an interest rate needs to be 4.5% or, for example, 0.5%? Well, this is based on a lot of things such as inflation data. So high inflation will lead to higher rates, as we discussed last week. Employment reports, so for example, NFP, strong job growth can push the rates up higher. GDP growth, a growing economy may lead to rate hikes as well. Retail sales and consumer spending, increased demand can lead to inflation and again, rate hikes. Bond yields, central bank statements, geopolitics, everything can influence those interest rate decisions, okay? So interest rate decisions are kind of like at the top of the pyramid, and then underneath it, you have all of these individual things which will affect the decisions that are gonna be made, okay? That's why I always say interest rate differentials is what, let's say, moves the market, and then interest rate decisions are based on these individual components, okay? So that's why I always say, like, okay, fundamentals itself is not like a one-way street. It's not like, okay, interest rates go up or interest rates go down. No, it's going to be based on all of these individual factors that I have here on my screen, okay? So let's break it down, because this is what everybody wants to know, very simply said. So higher interest rates mean a stronger currency, because higher interest rates attract investors seeking better returns. Increased demand for the currency will lead to an appreciation. So for example, if the Federal Reserve in the United States raises rates while the European Central Bank keeps the rates unchanged, the USD will strengthen and Euro USD will fall. If you have lower interest rates, it means a weaker currency, because this discourages foreign investment, because you don't get a lot of return on your money in that specific country. This means less demand for the currency, and it will then lead to a depreciation. For example, if the European Central Bank cuts its interest rates while the Fed keeps rates very, very steady, the euro weakens and Euro USD will rise. Now, Japan, guys, negative rates. This is what you all want to know. This is the example. I didn't think about the white background. That's why you're just seeing a red dot, but this should be the Japanese flag. We're now going to give you an example, which is going to be very, very tangible. And it's going to make you understand exactly what you need to know, okay? So, first of all, what I want you to know is the reason why Japan has very low interest rates, guys. Why does Japan have very, very low interest rates? This is extremely important to understand. There's a few reasons for this. First of all, deflationary pressure. Japan has struggled with deflation, so falling prices for decades. So remember, guys, what I mentioned here. The key economic indicators that affect those interest rate decisions are, for example, inflation. So like I'm just mentioning, inflation in Japan is low, so there's deflation, and this therefore causes negative rates because the Japanese central bank wants to keep those interest rates low, so they keep on stimulating the economy and that people don't just keep money on the bank to save that money. They want people to spend the money. Furthermore, weak economic growth. So Japan's economy has been relatively stagnant for many years due to factors like an aging population, low birth rates, and structural inefficiencies. Currency depreciation, negative interest rates will weaken a country's currency, which in Japan's case helps make export very, very competitive in international markets. A weaker yen can support Japan's export-driven economy. So Japan is, for example, a very big exporter of, let's say, cars. I think 50% of all cars of Hyundai or Toyota, for example, in Japan are exported to the United States. So it's very important that Japan has a weak Japanese yen because then it becomes more interesting to export to other countries, okay? If you don't understand what I'm saying, it doesn't matter. You can ask questions afterwards inside Discord or wherever else. There will also be an opportunity for some questions and answers, of course. And then we have debt management. So the Japanese government is carrying a significant amount of debt. Low or negative interest rates reduce the cost of servicing that debt, which will help keep the government fiscal position more manageable. So Japan, for example, has a 260% debt to GDP ratio, which is extremely, extremely high. And if the interest rates would be very, very high, it would mean that it would be very expensive to service that debt because Japan needs to borrow money in order to pay off its debt. And if then the borrowing cost is very, very high, they'll just cut themselves in their arm, whatever way you want to put it. So I have an image here just to make it nice and easy. So central banks reduces the interest rates below zero. It encourages public spending and borrowing. And then in return, it will stimulate the economy and market cash flow. Okay, so this is the overall kind of like idea of having those negative interest rates. Now, USD yen is the perfect example, guys. This is what you need to understand. Okay, so dollar yen here on the monthly time frame or on the weekly time frame, doesn't matter how you look at it, it is pretty much just like crypto. It keeps pushing up and up and up and up and up. And the reason for this is not because it's in an uptrend or not because there's a supply demand zone. Well, obviously a demand zone is nice to go long from, but the actual reason why a currency is pushing up higher has to simply do with those interest rate differentials. So that makes it so much easier to trade once you understand, okay, what are the interest rate differentials, or what is the reason why the Japanese yen should be weak, and what is the reason why the US dollar should be strong. And if you then understand that, let's say, the correlation between those two aspects or those two individual components, then it will be very easy, let's put it that way, to form that fundamental bias, and it can support the overall technical perspective that you have on a chart. Because if you understand that the overall longer term swing trend for, let's say, the coming 2-3 years is long simply based on those interest rate differentials or the interest rate decisions, as I showed you at the beginning of the presentation, right? Remember, the interest rate in Japan is lower than 0.5% at the moment, and in the United States it's 4.5%, so it means high interest rates in the US, and what you see then is that we keep pushing up higher. Okay, as simple as that. So here, United States interest rates have been going up since 2021 and all the way up actually to like 5.5%. And if we look here on the right, we have Japan, even with negative interest rates all the way back in 2020 and 2021. And you can see it's not going above the 0.5, where the United States, it's above 4.5 at the moment. So that's an interest rate differential of 4%. And that is therefore causing the dollar against the Japanese yen to continue pushing up higher. Okay. As simple as that. And you guys can look for yourself after this presentation. Just go onto the charts. Look, for example, in 2022, the Fed raised rates aggressively to fight inflation, making the dollar more attractive. And this caused Euro USD to drop all the way from 1.2 all the way back down to 1.05. Example number 2, the European Central Bank against the Fed in early 2023. The European Central Bank was slower to hike rates compared to the Fed. Again, this caused Euro USD had struggle to recover. Example number 3 is pretty much the one that we just discussed, with Japan having negative interest rates. And then again, Brexit and the Bank of England. After the Brexit vote in 2016, the Bank of England cut interest rates to support the United Kingdom economy. And again, the pound weakened sharply against the United States dollar. So again, low interest rates, weak currency, high interest rates, strong currency. As simple as that. So you can look for yourself afterwards. I've also attached here an image just to make it, again, a lot easier for you guys to understand. I'm not going to read the whole piece of information. All I want you again to understand is that the Fed lowers interest rates, the banks lower interest rates, borrowing becomes less expensive. So again, if you lower interest rates, borrowing becomes less expensive, and then consumer spending logically will go up, because if you want to, let's say, buy a house or you want to buy a new car and the interest rates are very low, it's very cheap to borrow money, you're going to borrow money. What you're going to do with the money, you're going to spend it. If the Fed raises interest rates and borrowing becomes very expensive because you have to pay high interest on your loan, then what are you going to do? You're not going to borrow that money, you're not going to spend money because it costs a lot, right, to spend money. So as simple as that. And this will then cause an economy to slow down, or inversely, it will cause an economy to grow based on that decision. And the reason that I put all this text in here is so that afterwards, when I share the presentation with you guys, you're going to have a good understanding of how interest rate works for yourself. So again, take some notes of this. To control inflation, higher rates slow down inflation by reducing spending and borrowing, like I just explained. And then to stimulate growth, the lower rates in turn encourage borrowing, and then people will start spending and investing more money. To maintain financial stability, the central bank will adjust the rates to prevent economic overheating or in turn again a recession. And last of all, to manage exchange rates, the higher interest rates can attract foreign capital, strengthening a currency. Okay, so these are just, again, some simple bullet points which will help your overall understanding of what I've been explaining today. So what can you do to keep an eye on what's going to happen to those interest rates? Well, you can watch the central bank meetings. Obviously, I don't expect you to read or to listen half an hour of these boring people talking. Myself as well, I don't do it. I just read the bullet points and the highlights after they have spoken. But this is something that you should really keep an eye on. Follow the key economic indicators like inflation, right? So CPI, PPI, and obviously unemployment as well, being NFP. NFP we have this upcoming Friday. CPI or inflation numbers, for example, came out this morning, I think, in Europe as well. So keep an eye on that because these all affect interest rates. So sometimes what you see in these central bank meetings, like Powell, for example, he says the next decision of interest rates is going to be made based on the inflation numbers. And then you'll keep an eye on CPI and PPI. Or he's going to say the next interest rate decision is going to be made based on unemployment. And then you know, okay, I have to keep an eye on, for example, NFP. Track interest rate differentials between the major economies, like I just explained with, for example, dollar against the Japanese yen. And use rate expectations to anticipate on currency movements. A good example of this was Euro Swiss. So, for example, if you look at Euro Swiss overall, we saw Euro Swiss push in towards the highs over here. Back in, the beginning of March. And this was under the assumption that the Swiss bank was going to lower their interest rates even further. So that caused Euro Swiss to make this massive push in towards the highs. So it can be that easy if you understand what the market is going to be pricing in and what the expectations are going to be of those interest rates. You can already beforehand start positioning yourself and start playing the overall rumor, and then get out on the overall news, which occurred somewhere here at the top, okay? And then pay attention to central bank forward guidance to anticipate the future rate exchanges. So as simple as that. So that's it, guys. That was what I prepared for today. I hope you guys all enjoyed that little presentation. And if you have any questions, obviously you can always message me on Discord, tag me on Discord, or tag Rutger or one of the team members, as we're there to help and support with whatever questions you have of interest rates. So let me know if there are any questions, and otherwise, without further ado, we'll dive back into the charts and see what is going on. Now, let me know, guys, are there any questions at all? And did you guys pretty much now understand what I wanted to explain about those interest rates? And does everybody have a feeling that they have a little bit of a better understanding overall of what those interest rates are and how they affect the market, guys? Does everybody have a better understanding? Because that for me was the main goal. I just want you guys, just like myself, to understand what actually moves the market, and how you can kind of anticipate on potential bigger movements within the overall market structure that we have. Because I'm also going to explain today a little bit why, for example, we've seen a lot of weakness on the other hand on some of these other currency pairs. Because if we go to, for example, let's have a look at AUD/JPY. So this is a pair that I've been looking at for the recent week. Or if we look at, for example, Aussie Swiss, we can also look at that. Well, Aussie Swiss is pushing beautifully back in towards the highs. AUD USD should be pushing as well. Yeah, of course. Not so strong yet. But obviously, I took a stop loss on ADUSD, as most of you know. I took a long position, I don't remember where it was, I think around here, back in towards the highs with my stop loss underneath the low. Obviously, I got stopped out over here. Now, the main reason, for example, again, from a fundamental perspective, why we got stopped out on this particular position is because everybody, as you know, tomorrow we have in the United States at 3 p.m. Washington time zone, we have Trump speaking on tariffs. So the entire world, guys, the entire world is getting into a so-called risk-off sentiment, okay? So what does this risk-off sentiment pretty much mean? It means the fact that people put their money into those so-called safe haven assets, right? So what is a safe haven asset? So a safe haven asset is, for example, gold. So gold is pushing in towards the highs. Why? Because there is a lot of uncertainty within the market. And when there's a lot of uncertainty within a market, you're going to see markets like, for example, gold push up higher. You're going to see, for example, let's get into, let's say, NZD-CHF. You're going to see NZD-CHF push in towards the downside. You're going to see AUD-JPY, what? Push in towards the downside. It's as simple as that. And obviously, if this overall bias that you then have based on simply what you read online kind of aligns with the overall market structure. So let's say this here is your swing high in towards the swing low, and you see, okay, the market retraces in towards where? The 618 fib. It does what? It grabs liquidity above this internal high and it pushes in towards its overall buy before the sell. And you understand, okay, Trump is going to be speaking about those tariffs on the 2nd of April. This could have then been a potential good shorting opportunity for AD-JPY in towards the downside. So if you understand, again, this is kind of like, again, in relation to those fundamentals, but if you understand, okay, risk off on one side and risk on the other side, so I'll just take a quick note of it. So we're going to call it RO on one side. So risk off, what does it mean? It means that the Japanese yen is going to be strong. It means the Swiss franc is going to be strong. And it means, for example, gold is going to be strong. And then on the other side, when we have a lot of, let's say, clearance in the market, a lot of clarity in the market. So we have the risk, it's both begins with the O, but we have a risk on sentiment, let's put it that way. Then you're going to see a strong what? AUD, and you're going to see a strong NZD, and you're going to see a strong what? Like CAD, for example. Okay, as simple as that. So by understanding and reading what is happening in the market, you can then position yourself into either one of those pairs, and you're going to have a better idea and understanding of where the market is most likely going to be heading next. Okay, so myself, I made a big mistake thinking that we were already getting into the risk on environment, but then again, you see towards the 2nd of April, and which is going to be tomorrow, the market moves into that risk off sentiment where we see a strong Japanese yen. That's why we, for example, saw dollar yen tank in towards the downside as of recent, because the market is preparing for Wednesday. So yeah, this, guys. So let me read the chat real quick. What is being said? Let's see. How long does the interest rate affect the movement in the market? So most of the times interest rates are going to be kind of like lagging. So it can still take up to a month, for example, even before you really see the overall effect. How geopolitics affect the currency? It's a very broad question, a little bit too hard to kind of like just say it works like this. But pretty much like I just explained, that I think is the easiest way to interpret those geopolitics into your overall analysis. Just look at a risk off or a risk on sentiment, and then based on what I just explained, you'll understand where to move your money into. So if geopolitics are causing a lot of uncertainty within the market, so let's say if we go to Bloomberg now and you see the top article is Trump is gonna bomb Ukraine, or Trump is gonna get into an argument with Putin, this is obviously gonna be risk off. But if there is an article on Bloomberg saying, okay, Trump and Zelensky and Putin are gonna be friends and they're going to eat cake together, then it means, okay, we're back into a risk on sentiment where AUD and NZD, for example, can be stronger. Should we be looking for long-term effect or short-term effects of the interest rates? I would be looking at the long-term effect of it, because currency pairs can still make very big movements in between, but we have to look at kind of like the overall monthly and the overall weekly swing itself. Thanks, Zane. So the overall win rate of the strategy itself is around 40 to 50%, with a 1 to 3 risk to reward. Is there any expectations about what Trump will speak about tomorrow? No, not really. But I am kind of looking into selling the rumor and buying the news potentially. Any sell trade on gold at the moment? I do not really advice. Well, obviously I don't give financial advice, but I'm not really interested personally in looking for gold sells at all until after tomorrow, when it becomes more clear what is currently going on. Gold is obviously currently in a demand zone. I did see a chart with inside Discord this morning. I think somebody drew in a very nice channel where we had a very, very clear trend line. I think it was something, it's not going to be this one. It was something like this, I think. Something like this. Like this is currently the channel I think that we're in. So there was potential for it to push down lower, but as you can see, this is why I hate trend lines, and trend lines are a scam because it's just, yeah, like, you know, like just drawing in lines in thin air. Just look at the market structure itself. So overall, from my personal opinion, it is currently inside, obviously, a demand zone. So keep your eyes open for the demand zone itself. And then look for liquidation because we reacted currently to this sell before the buy, but we have quite some ascending lows. However, what you do see, by the way, what is nice to see is that we liquidated this initial low here. But yeah, for myself, let's see, gold is currently consolidating. So it doesn't really have any effect to trade it at the moment. I think there is some US data coming out very, very soon, JOLTS, and obviously ISM manufacturing PMI, which is a survey. So we have one survey and we have the JOLT job openings coming out. So yeah, keep an eye on that. That's going to move gold today, 4 o'clock, so in around 1 hour. So until then, I'll probably just stay out of gold if I were you, and keep an eye open for maybe if it liquidates some lows, then to go long again. That is what I personally would be doing. Let's see. Yo, doing well. Currently in Portugal. Nice, man. Hope you are doing well all the way from Portugal. I asked expectations about what time he will speak. Oh, sorry, Justin. He's going to be speaking at 3 o'clock Washington time. So yeah, US dollar, guys, that's a good question, because the US dollar is normally also part of the safe havens. However, the thing with the US dollar at the moment, usually Swiss is consolidating, but the thing with the US dollar at the moment is the fact that the US dollar is currently part of the, let's say, uncertainty within the world, right? We can all see that the market is moving away from the US dollar because they do not really know what is going to happen. There's too much uncertainty, hence why we've seen a lot of strength as well from the euro in the meantime, because again, people do not want to be inside of a currency pair, being the dollar, where a president just keeps on slapping around tariffs. Now, my opinion on tariffs is not relevant, but what my opinion is on the overall matter is that Trump is very unpredictable, and people who manage billions of dollars don't like it when somebody is unpredictable. They want something that is boring. They want some certainty, right? Because us trading on $100,000, like, it's nothing compared to what these bigger people obviously trade with. So that is why, yeah, you need to kind of like think like a bigger bank in these kind of situations, and then you'll understand, okay, it doesn't really affect that much. Okay, guys. So make sure to speak English, always highly appreciated. For the rest, overall, the market not really moving too much. Looking at NU, I mean, NU took out some equal lows. Still very interesting for potential long, but only after tomorrow. We took out these two lows over here, and on the lower time frame being the 4 hour, you're now inside 4 hour demand over here, but you also have one lower demand zone as well. I'll be waiting for maybe one more swipe and then something like a 4 hour change of character, or if it breaks this high, then I'll also be interested in some longs. For now, not really interested in shorts myself. I'll wait to see what happens tomorrow before getting involved with an opportunity on either NZD/USD or AUD/USD. For the rest, euro dollar is the immediate bias is bearish. It's pushing, but as we all know, it's not very likely that it's going to break out of this kind of like mini range that's currently trading inside of, due to the fact that we again have that news tomorrow. So what you kind of want to do in these situations is hedge yourself. It depends, like, what do you think is going to be happening tomorrow? So Swiss yen is, for example, a pair that in my opinion is not very interesting at the moment. Why? Because you're trading two strong currencies against one another. Obviously Swiss and the yen are both safe havens, and in this kind of market condition, especially into tomorrow, you don't really want to be trading it. That's why you will often see periods of consolidation on these pairs, especially when there's a lot of uncertainty, such as February into March. Obviously, when tariffs was a very big topic, you saw that the overall market was consolidating. Now, I understand that you are maybe interested in looking for a long position from this area of demand, but myself, I see Swiss yen currently as a pair that is consolidating within this range, so I would want to stay out of it for now. Why is the market so slow? That's what we're pretty much talking about the entire session long, because we have the news tomorrow. Dollar yen, I was looking for a short position actually this morning. However, it missed out on taking out the high. I was looking, if we go into the daily time frame, for the daily fractal structure to play out. Let me just delete this again. So overall here on the daily time frame, what we had was a fractal high break, then we had a fractal low break. So that means that you're then bearish. Overall, the buy before the sell is then your supply zone from where you want to look for a short position. I then went on to the 4-hour time frame, and on the 4-hour time frame, what did we identify? We identified a supply zone within the daily supply zone. So that is this zone over here. Now, that is in the supply zone where you want to look for a short position from. We kind of formed an initial high over here, which for me is then liquidity. So I was looking for one more swipe and then the overall sell-off to occur on dollar yen. Hence why I'm personally not very interested in getting involved on these levels, also with the descending highs that we have here as well. So for myself, it would only be interesting if we push a little bit higher before looking for some more short positions. Some of you are also looking at GBP CAD shorts. Now, GBP CAD at the moment here on the daily time frame, let's have a look. So GCAD still has, let me see the 4-hour. So GCAD indeed pushed into where? Into this supply zone over here. So we have this supply zone. We had the equal highs positioned right below it. So we've taken out those. Now, what you would want to see is confirmation that this is valid supply. It reacted to this previous buy before the sell over here. So how do we then understand that this supply zone is valid? Well, we look for the 4-hour change of character. What is currently the 4-hour change of character low? The 4-hour change of character low is currently this low over here. So it would need to break this low before getting interesting for shorts, in my personal opinion. So I would prefer one more swipe up and then maybe a low break, because then this becomes your fractal low and then you could look for shorts. But otherwise, the blue line needs to break before looking for a potential shorting opportunity. AUD/USD and NZD/USD are not interesting at the moment for myself due to the reasons that I've pretty much mentioned this entire stream long. So wait for that for tomorrow. Furthermore, let's see, guys, any other pairs that you want to have a check-in on? We can have a look at GJ as well. So GJ, let's have a look. In the meantime, guys, don't forget to join the Discord. The link is pinned here in the chat of this stream. Discord.gg/The Trading Academy. And Basha wants me to give a kiss to Thomas and Rutger. Thank you, Basha, but I will have to pass on that. Maybe you can come here to Amsterdam and you can do it yourself. I think the boys are, or would love that. Moving on to GBP/JPY, what we can see here on the daily time frame is that the daily fractal structure shifted bearish. We can see that overall we had fractal high break and then we had a fractal low break. What that means is that this overall buy before the sell is then your overall supply zone over here. So this is currently the supply on the daily time frame that is in control. Looking now to the 4-hour time frame, we can then see that the overall market structure seems to be shifting as well. We had a nice break, and now we had a breakdown. So the immediate momentum on GJ is in towards the downside. Obviously, the Japanese yen is also strong at the moment, being in a risk-off sentiment. What I like about GJ here on the 4-hour is that it kind of came for all of this like liquidity. Like it's a little bathtub over here, you know. And we kind of took that all out. We pushed all the way back up into this refined little 4-hour supply zone over here, and from there we sold off. So yeah, I mean, some immediate further downside here on GJ would be nice. In the meantime, Rutger is saying there is a double present waiting for you in the office. Yes, guys, I think we all know what that means. But moving on into the rest, mate, I took 100 pips from GJ Morning on a sell. God bless you, Alejandro. That is beautiful, man. GPUSD shorts. GPUSD is not really my ideal setup at the moment. Main reason being is that it is consolidating. It is for me consolidating, and I don't really need to explain, I think, anything else. It's currently in a region where I personally would be more interested in getting involved with a buy again, back in towards the highs. Looking here at the lines, we can obviously see that we have this as a buying zone and we have this as a selling zone. So it's currently back in our buying zone. So I would only be focusing on buys from these levels. Obviously, I'm not saying that it's going to go up, but that is personally what I would be looking at on GU due to the overall consolidative nature that we currently have here. But I'm expecting a big push in towards the highs or in towards lows tomorrow, either direction. What else, guys? What else? Look at Euro Swiss. Yeah, so I was looking at Euro Swiss shorts as well. Again, a lot of uncertainty surrounding Europe at the moment. A lot of uncertainty also in France at the moment. Not sure if you guys are up to date on that, but let's say biggest right-wing party in France, their, let's say, runner or the person who was running for them. I am very bad with names, guys, but I think it was Le Pen, if I am not mistaken. Let me just open up Bloomberg 1 second and let me check before I sound really stupid here. Yeah, Le Pen. So Le Pen, she embezzled or she committed some kind of like money fraud, apparently, I'm not sure, in France with the European Union money, around 4.2 million, and therefore she has been convicted. She's not going to jail, but she's going to be having house arrest with an ankle bracelet. She's not allowed to leave the house. And what this means, obviously, is a lot of political uncertainty because her party is the biggest party within France at the moment. And with this, let's say, judgment of the court, she's not allowed to participate in the French elections for the upcoming 5 years. So she's not allowed to participate in the next upcoming elections. And now a very large part of her political party and her following is now stating that obviously there's a big fraud and they're being scammed and the democracy is being undermined. And even Putin also commented on the situation, that he also said that democracy is being how do you say it in the correct English way, that democracy is not being respected. So this is currently causing a lot of pressure in Europe. Well, not in Europe, but like more in France. But again, France is the second largest economy in Europe after Germany. Therefore, it is kind of like an important situation to keep monitoring, because it does kind of like cause some, let's say, political instability, but it's not as important as other decisions in my opinion, but it is something to take into consideration and to keep on monitoring. Now what else? Russia talking about democracy. No comment. But for the rest, that went wrong. I'm getting all nervous. Lol. Looking at Euro Swiss, please don't cancel me, guys. Looking at Euro Swiss overall, we had equal highs over here. We had a 4-hour supply zone over here, and therefore a nice shorting opportunity. The 4-hour time frame has now broken the fractal low, so keep an eye on this overall 4-hour supply zone, as it looks good to potentially head down lower from it in towards the downside. Looking for that. What else? We also obviously have XAG. Being silver. Somebody's also asking. Somebody's also asking about Aussie yen. Aussie yen is still a potential good buy. Silver is playing out with the overall kind of like bias that we have. Silver still a good buy, guys. Anybody selling silver is. I was thinking of a kind of like a joke to say, but there's not really any good jokes, I guess, with silver or whatever. Silver is a good buy. Let me just put it that way. No financial advice, obviously, but the overall market structure is bullish. We have bullish swing, we have pullback, we have bullish swing, and where do we expect the bullish swing at least to continue into a new higher high? So obviously we're now waiting for this overall demand zone now to hold, or we expect the demand zone to hold, and to do what? To push the market up higher. Overall, the market has retraced again into where I think you guys already know it. Yes, into the 0.5 fib. So overall looking good from a daily perspective to push up higher. Looking at the 4-hour time frame, did we swipe the low here? Let me see. Did we swipe the low? I don't think so. If I look at it kind of like from just an eye perspective, no, we didn't swipe the low. Sad enough. But still, it is looking good, obviously, to push up higher. Although the immediate kind of like 1-hour structure is bearish, so do keep that in mind. What you kind of would want to wait for is maybe for us to like really take out these highs and create some more bullish order flow. But overall, yeah, I mean, it's making a descending correction. I would be looking for some further upside. However, the ideal long position, guys, where would that come from? That would obviously come from the lowest area of demand, being this sell before the buy over here. Yeah. That's pretty much what I would be most interested in for a potential long opportunity. Okay, so let's keep an eye on that. What else, guys? Bitcoin. Yeah, Bitcoin is a difficult one at the moment. Let me just make a video real quick, guys, if you don't mind. But Bitcoin is a difficult one. Here on the stream with the team. So overall, Bitcoin is a difficult one, guys. Why? Because again, it is very, very dependent on what is going to be happening tomorrow. Again, if we look at Bitcoin overall from let's say zoomed out perspective here on the daily, you can also see that on the daily time frame we are currently consolidating. To be very honest, it is not looking good at the moment. This is currently the supply that is in control. I would not be looking for longs on Bitcoin yet, only until what? Until we break this immediate high over here. So the immediate high that needs to be broken is around 89K. If that breaks, then we have potential for further upside. But as long as that holds, it should push down lower. Okay, so this is kind of like the immediate outlook that I have for Bitcoin, shorts until we break that. And then obviously if we look from it from a let's say supply and demand perspective, this is where you want to be buying 73,000. That is when I'm going to sell Thomas's kidneys. I'm going to sell Rutger's kidneys as well, and I'm going to be buying more Bitcoin. So that is what I'm looking for. Basha is asking for USD CAD. I was late. You've been in here already for half an hour, I think, Basha, but especially for you, we're going to be looking at USD CAD. USD CAD overall is holding nicely. Also based from a fundamentals of Forex fundamentals, it is bullish. So always good to look for longs as well if it is in line with the technicals. Why is it in line with the technicals? Because if we take the range high and you take the range low, what can you then see? I'm just ignoring this overall scammy wick here. Is that you can see again, where are we bouncing from, guys? We're bouncing from the 25% level again and again and again. So where you want to be buying 25%, where you want to be selling 75%. So USD CAD still looks good to push up higher in towards the highs. As simple as that. Looking at it from a 4-hour perspective, and again, the chart looks like a flag of some kind of scam country somewhere in the Caribbean. But if we look at the 4-hour time frame, we can see here that we got what? We got a change of character on the low, change of character on the high. This became your demand zone at the time, and that boom pushed the market up higher. So overall, still looking good. I wouldn't really take into account like the liquidity play, but I mean, there is a nice high over here with a lot of descending highs over here. So yeah, I mean, it still has potential to push up higher, but it will be dependent on what Trump says tomorrow. I think there is potential for USD CAD to fly up higher, because again, if Trump just tomorrow says we're gonna screw over Canada again with some kind of crazy tariff, then that is gonna indeed push USD CAD up higher. So I think USD CAD is a relatively safe bet. To put it up higher. Sorry, I was distracted by Thomas Rutger comment. USD Swiss long on the 4-hour demand. USD Swiss is currently a pair that I would stay out of due to the consolidative nature that it currently has. It's currently consolidating, so a little bit too much of a guess. Let me put it that way. And then if we look at AUD/JPY, you're asking me, Fabio, can we take a potential buy on this pair at the moment? Personally, I would stay out until tomorrow on these risk off pairs, or risk on pairs, excuse me, being AUD and NZD, until we have a little bit more certainty, because what you ultimately want to be waiting for is somewhat of a clearer reversal. Obviously we took out some liquidity underneath the lows, but it's a little bit too much of a guesswork at the moment, in my opinion, on this pair. So I am personally staying out of it myself. So sorry for the disco, guys. USD Swiss longs, no, we are waiting for that because it's consolidating. CAD Swiss, I think is pushing. No, it's not. So CAD Swiss overall is back in this previous daily area of demand, not looking very, very good in my opinion. Overall, what can we see? We can see that this high held over here as the fractal high. This is the fractal low. The market retraces into where? Into premium pricing. So if we use the premium versus discount, we can see we come back up into premium. We do what? We break the fractal high here, we break the fractal low. So we have a structural shift in line with the overall daily fractals as well, and the immediate 4-hour order flow as well. Buy before the sell over here, and then again a buy before the sell over here. So if we break this low again and we close below it, then you'll have another buy before the sell. So immediate order flow is bearish, so we would need to wait for some more bullishness to come into the markets, which will not come until tomorrow afternoon in my very humble opinion. Euro NZD, I know a lot of people were looking for shorts on that, including Mitchell. So let's have a quick look at Euro NZD. Looking at it here, we can see that Euro NZD has done what? It has pretty much pushed into what? Into this buy before the sell. Looking at it from a 4-hour perspective, we got what? We got a 4-hour change of character here on the highs. 4-hour change of character high. This was the 4-hour change of character low. This is now supply. So I would keep an eye on this buy before the sell candle over here and look for potential shorting opportunity back down to whatever demand zone that you want. Again, NZD strength will just be dependent on tomorrow. On tomorrow, literally. JPY basket, we can have a look at that. So what you're going to see is that the yen basket has been strong. Obviously for the past 3 days in anticipation of Wednesday. Overall, what can we see? Not a lot from this basket. I mean, it's consolidating as well. It's kind of like stuck here. Again, at the 0.5 fib, if you would make it smaller and ignore like that little wick over there, again, not very interesting. Nah, it's not very interesting. Like if we look at it from a fractal perspective, what you can see is that we had a fractal low break, fractal high break, and this is now pretty much like your demand zone that's in control. So for now, further upside makes sense. Equal highs, equal highs, equal highs, equal highs. So let's see. Again, it will depend on tomorrow what it's going to be said. We can say equal highs, and we can say we have ascending lows. But if Trump says, yeah, FU, it's going to be an FU candle, you know, as simple as that. So just wait for what he says tomorrow, and then based on that, that's going to be the new trend for the upcoming 2 weeks. And then it's going to be, I don't want to say easy to trade, but the bias will be a lot more clear on where most of these pairs want to be heading next, because we're seeing big moves in both directions on all of these pairs, to be honest. Euro pound, we can have a look at euro pound. Yeah, so euro pound itself is where it's inside daily supply again, though it's not a fresh daily supply zone. Overall, the daily fractal is bearish with this being your high and this being your low. So you're kind of like in the extreme. It's not the ideal trade I would want to take. For now, demand seems to be in control here with this demand zone. If you're looking for longs, now is pretty much the time to get into longs. If you're looking for shorts, you would want to wait for this sell candles low to go, and then you'll have a good sell opportunity once again. So yeah, that's it for today, guys. Thanks so much for tuning in. Wish you all a fantastic trading day and a fantastic afternoon and evening. Everybody, thank you for tuning in to another presentation here on the Trading Academy YouTube channel. If you have any questions, as always, we are inside Discord there to support and help you. Link is pinned in the chat over here. Also in the description of this video, you can also find the link to the Discord and whatever other links you want. Make sure to check out us inside Discord. If you have any questions, let me know there to support. We'll analyze some other pairs for you as well. For example, NAS and S&P 500 and NQ 100. We'll be inside Discord, guys. So again, thank you very much for joining in. Wish you all a fantastic day. Hope you guys appreciate it. And that was pretty much it. I'm not taking any trade today myself, as I'm waiting for the fundamentals to be updated tomorrow. So let's see what the bias is going to be for the upcoming weeks. Thank you so much all for tuning in, and wish you all a fantastic afternoon, morning, or evening from wherever you are in the world.